Have you ever asked yourself the question, why are there so many different prices quoted by accountants for accountancy services? Are you a little worried you may be charged too much or too little? Well, in this video, we're going to look at why that's the case and go through some of the points to consider when making the right choice for you when hiring an accountant and pricing. I'm Kim Marler from Crystal Clear Accounting, and in this video I'm going to explain what makes accountancy services more expensive, what makes them cheaper, and why some companies that sell accountancy services are more expensive and why some are less expensive. The first thing to note is there is a myriad choice, both in terms of accountancy providers, some large and small, and a whole array of different services that you might choose. There's no right or wrong choice, it just comes down to what's important to you. It's a little bit like buying a car. There are some basics that you need to have and then lots of extras, and it's down to a number of factors. Personal choice, budget available, and what you want, what's important to you, and how you perceive the value. So, what are the factors that affect price and size of accountancy provider you choose? The trading structure of your business, how much time you have available to do, say, the bookkeeping, your attitude to risk, your wants and values. Time is money, yours or the accountancy provider. Are they a modern thinking provider of accountancy services? How does the accountant bill? A word of warning, be careful about buying on price. Remember the car scenario, do your research, think about what you are looking to achieve and decide who you think will be able to most help you get there. So let's look at the factors that make accountancy services more expensive. A sole trader structure is usually cheaper than a limited company one, and that's down to the work involved. A sole trader may only have a tax return produced each year, so the cost of this service may be anywhere from a couple of £100 up to £1,000 plus if you have full sole trader accounts. Why would you choose a sole trader structure? Well, it's very much down to a number of factors. How complex a structure do you need and want? Do you need the protection of a limited company around you? Do you want and need to be VAT registered? The amount of profit you will make. As at modest or low levels of profit, any tax savings you might get from a limited company structure could be swallowed up from the additional costs of operating as a limited company. If you are just wanting a lifestyle business, and perhaps it's a business on the side, and you already have an employed job as well, a sole trader structure may be all you want and need. A limited company is a separate legal entity to you. So when you set one up, you might be the only director and shareholder, but in essence, you are still an employee of that limited company, and there are different ways that you pay yourself: salary, dividends, and expenses. In order to pay a salary, you would need to operate a payroll generally, which has extra reporting requirements and deadlines, and would increase costs. There is a more involved reporting process for limited companies. As a sole trader, you only have to submit a self-assessment tax return. However, you might want to do a proper set of accounts, a profit and loss and a balance sheet, but you don't legally have to. Whilst it's always best practice, you don't even need a separate business bank account. With a limited company, it's a whole different ballgame. You have to have a business bank account. You can only take money out in the form of salary, dividends and expenses, and you shouldn't put personal expenses through the business. You also have to produce a full set of accounts for the business owner. and for completion of certain information on the tax forms. For the company, you have to do a personal and company tax return. The set of accounts that is produced is then cut down for what needs to be filed at Companies House, as you only need to file a balance sheet. You may have heard of abridged, filleted or abbreviated accounts. Credit agencies can use this information lodged with Companies House, as do funders, should you require to raise finance. As a limited company, you also need to complete an annual confirmation statement and a person of significant control register with Companies House. There is a fee to file this, but usually accountancy practices roll that up into the fixed fee, so you don't get charged extra. It is worth saying that as a limited company, the expenses you can claim for tax purposes can be very different, or the way in which you claim and amounts can be different. I often hear on social media posts things like, "My friend does his own tax return and he claims for X, why can't I?" It's because there is no definitive list that HMRC issue. It is often open to interpretation and case law, and as there are over 17,000 pages of tax law, and the individual who does their own tax return often is blissfully ignorant of this case law, and that's often when they can come unstuck when HMRC comes knocking. So, structure and the way your business is set up can mean the service costs more, as does the expertise of the accountant delivering the service. Another factor to bear in mind is software. If you are submitting sole trader accounts, it is possible to submit a tax return on HMRC software. However, it's not so easy for a limited company, as they have to be electronically tagged so the accounts arrive at Companies House and the corporation tax arrives in the right format, in the right codes. Another factor influencing the price is how you keep your underlying bookkeeping records. Do you keep them in paper form and hand them to your accountant? Very rare these days with the advent of making tax digital. Do you use an Excel spreadsheet or cloud accounting software? Also, just because you have software doesn't mean there is no work for the accountant to do. If an accountant has to correct your mistakes, it can often take longer than doing it from scratch. If you don't enjoy doing the bookkeeping and make mistakes, these could be costly, especially if you have VAT. Maybe it's time to outsource to the accountant or bring in a suitably qualified bookkeeper. Remember, when you hand over your records to an accountant, they are taking those records and producing the accounts from them. They are not doing a full audit. You wouldn't want to pay for them to redo or check all the individual transactions, which is what they'd have to do to correct your mistakes. Audits cost many thousands of pounds, and that's why bigger companies have to have them, to give certainty of the accuracy of the records they submit. Accountants may pick up on the odd mistake you make when compiling your records, but it may be by chance rather than design in a lot of cases. They will use their expertise and knowledge, possibly do an analytical review and compare year on year, etc., to spot anomalies. However, they are not guaranteed to pick up any or all of your mistakes. It depends on how thorough the accountant is. Remember, the less you pay means there will be no money left to even do a cursory review, as the fee will be used on producing the annual statutory statements and getting them filed. I'm afraid it's down to you. It's your records, it's your business, so you need to make sure you can ask if you are unsure on anything. Worth noting and remembering is you cannot abdicate responsibility for your tax affairs. The next factor in determining the price is how much help and support you get. How proactive are they? Every accountant will tell you they are proactive, but are they in truth? Do they take the time to get to know you and your business, understand your goals and what's important to you? Do they come up with the best ways to extract your money and make sure you understand? Do they communicate by email, webinars, seminars, WhatsApp, newsletters, video, and send you info that's relevant to you? Are they proactive and help you to save as much tax as legitimately possible? Do they have a tax investigation fee service? If HMRC investigates you, then the service effectively covers the cost of defending you to HMRC. I use the word defend as HMRC may pick you at random, even if you've done nothing wrong. But this action can take a while to resolve, and a whole lot of stress and hassle and additional cost which wouldn't be included in the fixed fee service. Can they help you make important decisions, like investing in a company? Do they offer business growth services, like financial models, budgets, plans, strategic plans, management accounts, key performance indicators and scorecards, coaching and quarterly or monthly meetings aimed at helping you to move and improve your business? Do they understand what it's like to work in a successful business and can help you with your systems and operations and even staff? If you have a lifestyle business or you don't want to grow, then you probably don't need these services. So that accountancy firm may not be a great fit for you. So we've covered off what can make the accounting service more expensive. Well, the opposite is true in terms of what makes it cheaper. So in essence, it would be a sole trader structure rather than a limited company structure, the number of services you took, the amount of legwork you did yourself, the complexity and number of records, whether the advisor was qualified or not, whether it's a very small accountancy practice that we call a sole practitioner. Let's look at why some accountancy practices are more expensive. There are a number of reasons for this, and they include the size of the accounting firm. For example, if you were to choose one of the biggest four in the UK, PwC, Deloitte, EY and KPMG, they would be the most expensive. They have a huge cost structure to pay for, huge offices, overheads of running such a large business due to hundreds of UK partners, large staff salary costs, lots of regulatory costs, huge insurance costs and huge training costs for their staff. This type of accountancy firm is more suited to large UK PLCs who need audits. As the owner of a small company, you don't need an audit in most instances. Or it's also suited to those who have a complex structure with subsidiaries and overseas divisions. They will probably have a need for extremely complex taxation services, the likes of which a small business owner would never need. Their fees would be commensurate with this and would probably be in the region of 5 or 6 figure sums. Their target market is the PLC audit clients, and they can charge millions for this. Even if you then came down to the regional firms like RSM, BDO, Grant Thornton, they would similarly have a very high cost structure. And for a small limited company, just to do the accounts and tax returns would cost in the region of tens of thousands of pounds. So unless you really need a complex tax advice and the weight of a top 10 accountancy firm, you probably wouldn't go for them. You would then have large regional practices. And again, they have some large overheads to cover, lots of nice premises in the centre of major cities and lots of team members to keep trained. And again, their costs are beyond the reach of most small businesses. There are over 43,000 accountancy practices in the UK, so you could spend a considerable amount of time trying to find one. I'd recommend you decide what's important to you and what services do you really need, and then go from there. Find a firm who has lots of reviews, over 50, but those reviews talk about the services and the values that matter to you. You'll probably want to ask them how many clients they have, as if they have more than 200, they probably can't service them and they probably pile it high and sell it cheap. You won't get a personal service. That may be what you want, but most accountancy firms in this arena won't be able to give you good quality time and advice to help you grow. But if you're a sole trader, it may work for you by keeping costs down. So where do we sit? Well, here at Crystal Clear Accounting, we are based in Hale, Altrincham, not far from Manchester Airport. Where we actually sit though is mid-table in terms of cost. We are not the most expensive locally, nor are we the cheapest. Our offering is all based around value for money. We are not the cheapest, but with us you will get a very personal, bespoke service to meet your needs, with guarantees around deliverables. Our clients are all ambitious business owners who are looking to grow and either make more money through increased profits, have better health, be less stressed as the business is under control, operating efficiently and effectively, and better relationships as the business is better process and system driven. They can now afford to take more time off, knowing that the business will run without them. They recognise they need more specific help and advice with the financial side of the business, and meeting with their accountant on an annual basis just doesn't cut it. We have fewer clients, but we have deeper relationships with them. We take the time to understand them and their goals, where they are now and where they want to be, and then we use our specialist skill to help them. Firstly, we map it. We analyse exactly where they are now, understand where they want to be, and map out a plan to get them there. Next, we sort it. This involves making sure that all the financial data is flowing properly, so you have all the info you need in the right place at the right time. Then we score it. You'll get your own bespoke scorecard or dashboard to ensure you stay on track. And throughout everything, we support it, working closely with you proactively to optimise all the key parts of your business. Our clients are on a journey where they want and need more than just an annual service from their accountant. During this process, they often need in-depth help and support, and a higher level of support, like management accounts, key performance indicators, and a scorecard, and often help supporting them on their journey with monthly or quarterly meetings. Not all clients take all of these services, but lots do. However, at the very least, they start with the annual accounts and a strategic plan, so they know where they are going and what the milestones are to achieving this. Then, over time, they'll add in the other services as they grow, and they need the extra direction and support. For the Map It service of annual account service and our plan, our fees start from £300 plus VAT per month, and the usual upper end of the range for larger businesses taking the full package of Map It, Sort It, Score It and Support It is £2,500 plus VAT per month. Price is bespoke to your business and does depend on the package of services and the size of business and complexity. We tend to find that most businesses who work best with us are small limited companies who are ambitious and want to grow, and are currently turning over upwards of 200,000 to 5 million a year, and have been in business at least a couple of years and have a few team members. If you'd like to have a chat over coffee, virtually or face-to-face, and to see what's possible, all you need to do is call me or one of my team on 0161 410 0020 or email wecare@crystal-clear.co.uk. Hope that helped. Please subscribe to our YouTube channel so you don't miss any of the content that we release. Feel free to hit like and share, and thanks for watching.